Investing in high-quality growth stocks is an effective way to beat the broader market's returns, but finding the best growth stocks is easier said than done. To that end, one way to narrow your portfolio candidates is by searching for companies that are absolutely dominating a growing industry. So Motley Fool has asked their top investors to pick two growth stocks. And as a result, today we're going to talk about Baidu and Iron Mountain. Let's take a look. Most Americans probably haven't heard of Baidu, but the average internet user in China uses its services on a daily basis. The company has somewhere around a 75% share of the Chinese search engine market and appears to be in position to retain leadership in the space and take advantage of some big growth opportunities. Roughly 40% of China's population has yet to connect to the internet, and the search giant will almost certainly benefit as a greater number of people in the country connect to the web. The September ended quarter saw the company post a 29% year-over-year sales increase and a 156% jump in net income. Search remains a high growth business, with online advertising sales rising 22% over the prior year period last quarter, and it gives the company access to a vast treasure trove of data that can be leveraged to build sustainable advantages in other areas. The company is making big investments to ensure that it secures a leadership position in emerging technologies like artificial intelligence and autonomous cars. It also has an opportunity to benefit from rapid growth in mobile payment services, although it's currently an underdog in the space compared to rivals such as Alibaba and Tencent Holdings. Earnings growth could be smaller in the short term as the company invests in infrastructure and new product categories and complement its ecosystem, but the long-term outlook remains promising, with a rock-solid hold on the Chinese search engine market, an expanding number of internet users, and plenty of growth opportunities outside of its core competency. Baidu looks like a worthwhile investment, trading at roughly 27 times forward earnings estimates. So let's take a look at the charts. And as always, I usually start out with a 20-year monthly chart, and that's what we have here for Baidu, and the symbol is BIDU. And actually, the chart only goes back to about mid-2005. And I've been watching Baidu probably since only about 2013 or so. But looking at the price chart here, it has bounced off of that 50 EMA, as we can see here in 2013, and then in this time frame here from 2015 into early 2017. And it's also elevated above the 20 EMA. But given that the elevation is here in the current time frame, that is giving me some caution signals simply because it is elevated above both the 50 and the 20 EMA. And we'll see here some of the other oscillators, such as in the MAC. It had a nice bottoming process here by early 2017. I was looking at it at a potential investment at the time, but I did not take that. Currently, we're having a little bit of hesitation in the fast line here. Looks like somewhat similar to perhaps back here in 2014 and then at the top of 2011 and into 2012. So that's giving me a little bit of concern. I don't like the fact that we're starting to have this hesitation here. Moving on down into the histogram, we can see that it's topped out and has been heading down. A little bit of a blip here in the last month or so, but this may be on its way down. I'm not 100% sure, but I think that at least the MACD and the histogram are telling me that into the price rate of change. This is a little bit muddled, not giving me any real clear indication. It is elevated above the zero line. Looks like it is heading up here, but it's giving some sawtoothing here, and I don't like to see that necessarily. perhaps it's in a topping process. Moving here to the RSI. The RSI is also it's above the 50 midline, but it's not real strong, which I would have expected it to be much higher as it was in these previous periods here. And as you kind of look at these RSI levels, you can kind of see that we have a downward trend here. I don't like that disconnect. Moving into the stochastics, the same sort of thing. We've got a higher high here, and it's heading down in that sort of direction. So a little bit of dislocation there. The volume also dropped off precipitously beginning here in about 2012. That isn't necessarily a bad sign simply because of the price. This is more a result of the price heading up into the current levels. But I'd want to keep my eye on the volume. And then the Williams here, the Williams is also a little bit muddled. So let's go back up here to the price chart, and you can see again the volume as a result of a price being above 250, 260, 359 at the most recent close. That's causing that volume to go down. So I'd want to check into that a little bit further, perhaps on the weekly and on the daily charts. But from a monthly chart, just to begin with, it looks a little bit too elevated, and those oscillators just look a little too mixed with too much weakness, in my opinion. So I would not suggest you take a look at Baidu. I'd want to see how it looks perhaps in the next year or two, if it can head back down toward that 50 EMA, and then we would assess the stock at that time. So let's go to the next stock. When it comes to record storage and document security, there's Iron Mountain, and then there's everybody else. Check this out. Iron Mountain has 680 million cubic feet of hard copy records archived. They also scan 627 million images annually and store 1 billion medical images. Iron Mountain's 230,000 customers include 95% of the Fortune 1000. Iron Mountain is structured as a real estate investment trust, or a REIT, R-E-I-T, and they own 1,433 facilities all over the world. With such a dominant presence already, you may think that the company has little potential to grow. On the contrary, there are plenty of catalysts that could propel Iron Mountain's revenue higher. For example, the company has a big opportunity to grow in emerging markets, and the cloud storage, disaster recovery, and data archiving solutions market is expected to grow by as much as 30% by 2021. Finally, Iron Mountain has been quietly getting into the data center real estate business, which, as I see, the company's biggest long-term opportunity. The market for data centers has exploded in recent years, and Iron Mountain has the ability to leverage its respected brand name and extensive customer list to its advantage as it makes data center acquisitions. Plus, the stock pays higher than a 6% dividend yield. Let's take a look at the price chart. This is the 20-year monthly chart on Iron Mountain, and the symbol is IRM. And without going too much further, I can already tell that I like this stock, at least the consistency in the movement from the lows to the highs. Moving on down here into the MACD, we see somewhat similar consistency as well. We're just heading down here just below the midline or zero line, with the fast line heading on down here. So we're probably near a low. Looking at the histogram, it shows much the same. Moving here into the price chart. Price chart is sawtoothing on its way down, has yet to pop above the fast line, and we are just barely below that midline zero line right here. Moving into the relative strength did hit bottom here and has been heading up for the last few months or so. So that is a positive sign. The stochastic showing that there's just a little bit of a bottom here and a possible upturn in the fast line, still a ways away from the slow line. So there's an opportunity to take a look at the stock and perhaps get near its lows. Volume looks fine, looks like it's been relatively consistent over the past few years or so. And the Williams hit bottom in early 2018 and looks like it's heading on up. Now, in these last few times it hit bottom, it headed up and then came right back here, and you can see the same thing, bottom, headed up and came right back. So perhaps that may happen again. I'm not sure, but I think looking at the price chart here, we see that we do have a bottom and the stock price did move up. We're heading right into that 50 EMA, and that may give us a little bit of resistance on the way up. And if so, I would wait perhaps for a bit of a correction or backfilling in the price coming back down into this the low 30s. That level there, that would seem to be an opportune time if you're interested in Iron Mountain. Again, it is a REIT, so it may not have the strong growth that it has had in the past because it is a maturing company, but still that dividend of over 6% is attractive. So I would suggest if you're interested in Iron Mountain, conduct further fundamental and technical analysis. So for today, that's ChewDog Charts. Thank you.